The yen has blown through the roof. It's hit all-time highs after breaking the 152 resistance level earlier this month. And in today's video, I'll be taking you through the chart analysis and a bit of the fundamentals. So let's deep dive. We start off our analysis at the weekly chart, and you can see at the weekly chart, as of this recording, price is currently around the 157 region after breaking the 152 barrier that had held for quite some time. And I would like to take you through the prerequisites of a valid breakout using this particular yen chart. And I have around 6 items I usually look out for before I take a breakout trade. And one of them, using this chart as an example, will be a clearly defined area. As you can see, there's a market consensus around the 152 area. It had held for quite a while before it actually broke. So a clearly defined level is one of the things I usually look out for. And a clearly defined level is one that leads to large market moves, not just minor swings. As you can see, this touch of the level around October 2022, the move was quite significant in the overall market. The second touch was actually significant because if you go to your lower time frames, you can see these are actually trends in the lower time frame. So back to the weekly. So first thing you want to look out for is a clearly defined level. Once you've seen there's a clearly defined level, you ideally want to see a minimum of 2 touches of that level. For this particular currency, the dollar yen, we can see this was the first touch, led to a major move. Second touch led to a major move. So my condition, or rather my criteria of 2 minimum touches actually been met. This one actually gave me 3 touches. If I go scale down to the daily, we'll be able to see the final touch before we saw the breakout. The other thing I actually look out for just prior to the breakout is a pre-breakout tension or basically a build-up of bars just below the level. You ideally want to see bars, small bodied, just building up. That's like tension building up. And finally, we see the breakout. So that's the third thing I usually look out for. After the breakout has occurred, I usually look out for the breakout candle body. Ideally want 50% or more of this body to be above the level. As you can see, when the breakout occurred on 10th April, more than 90% of the breakout candle body is actually above the level. So that makes for a good breakout. Another thing I ideally look out for is an EMA carry. I usually use the 20-day EMA and the 10-day EMA. They are a bit faint on my chart because I rarely rely on them, but I use them as a good trend filter. And you can see prior to the breakout, there was a good EMA carry. Basically, you see that an EMA squeezing price. And ideally, usually during this tension, you'd see price respect the EMA. It ideally will not go or basically close below the EMA. You'd basically see the EMA acts as a sort of support. As you can see, just prior to the breakout, it will act as a form of support. The other thing I actually look out for is, like for this particular example, we are breaking out to the upside. Ideally want to see higher lows to the level. Like you see, this is the first time we touched the level, we formed this low. Second time we touched the level, this is a higher low. As you can see, the first low was here, the second low was here, the third low around this level, quite a very small low. It is basically a pre-breakout tension, but you get the idea. You basically want to see lower lows to a level, and that signifies that bulls are actually willing to buy this particular currency at a higher price. It means the would-be bears actually getting out, and would-be buyers are looking at this price chart and they're willing to actually get into the action. So if you're a bear in such a market and you see such conditions, just get out and turn your buyers bullish. Otherwise, you'll be stomped out of the market. They say the market is a standing force of discipline, and it attracts or basically extracts harsh fines for any transgressor. You don't want to be caught on the wrong side. So basically, those are the 6 items I look out for me to take a valid breakout trade. Now, on the fundamental side, I still believe the dollar is strong compared to the yen. Why? the rate differential is still high, in as much as the yen has gotten out of a period of negative interest rates. The Fed is not showing any signs of cutting rates anytime soon. Although the dot plot shows that we'll get 3 rate cuts this year, the market's confidence of getting an early rate cut is actually low. So it means we might see the Fed hold rates higher for quite a while before we actually get the cuts. And the other point I wanted to talk about is on the Bank of Japan intervention. They are notorious for this. They did it in around September or October 2022. And we can see how the market reacted. It was actually during this bear run that you see here. And the verbiage coming out from the finance minister is one of caution. I think they will intervene. I wouldn't advise you to take this trade right now. As you can see, price is parabolic. You ideally don't want to get into a trade when the price chart is parabolic, basically now on a 90-degree angle. You ideally want a nice sloping trend that is flowing on a 45-degree angle from the left side of your chart to the right side of your chart. Otherwise, you want to avoid this and just wait for a retracement. If we'll get a retracement to the 152 level, we may or may not get it. Again, this is price, yeah. But as the market looks right now, just avoid it. You can see this Friday candle. Before we actually close, you can see that body range. It's too high. You really don't want to get in there. If you missed the train, you've missed the train, yeah. The market will always give you a lot of opportunities to get in. Do not rush. Yeah, remember, if you don't place any trade, you're preserving your capital. If you miss that train, you miss that train. So traders, I hope that information has been of value to you, and I look forward to the next video. If you've enjoyed the session, please subscribe to the channel. And if you want more information on the fundamental side, especially given that I am a technical trader, check the description box. I'll be linking 2 resources for you. One is a video done by Paperstone on the USD yen fundamentals, and the other one is an article taking you through the history of the Bank of Japan intervention. I mean, as I said, they are notorious, and right now as we speak, the dollar has fallen to a 34-year low. Sorry, the yen has fallen to a 34-year low against the dollar. And the last time they intervened, I think the BOJ used around 9.2 trillion yen. That's around $61 billion, just to, tame the dollar gains. And I think they'll do so again. So be careful when you're trading this particular currency. And I'll see you in my next video. Thank you.